Hello guys, welcome to another value video. Today, taking an in-depth look at Adobe Systems Incorporated, ticker symbol ADBE. Uh, Adobe Systems Incorporated is an American computer software company based in San Jose, California. It offers a wide range of tools from web design tools, photo manipulation and vector creation, video audio editing, mobile app development, print layout, and animation software. Their stock price is $547 with a market cap of 241 billion. Their price to earnings ratio over the past 12 months is 46.4 compared to their historical 10-year average of 50.5. Their price to cash flow ratio is 35.8 and their dividend yield is 0. Their revenue has grown by 73.7% over the past 5 years, which is, I would say, pretty good. Their net income has grown by 77.8% over the same period. The earnings per share has grown by 97%, and notably the number of common shares outstanding has decreased by 7.8%. Moving forward to liquidity and solvency, we can see that the interest coverage ratio is 51.2, indicating a solid ability to handle debt obligations. The quick ratio is 1.11, which is pretty good. The long-term debt equity ratio is 0.28, and the debt to equity ratio is 0.49, which are both indicating a moderate debt load. Cash from operations is approximately 7.4 billion, showing an increase of 65% over the period. Cash from investing activities is 800 million, showing a change of minus 270% from 2019. No, this is not a decrease, but when you calculate positive over negative numbers, you get minus percentage. This is basically what it says, that for fiscal year 2019, cash from investing has increased from minus 456 to 776 million. Cash from financing is a minus 5.2 billion, showing a plus 76% change over a period. CapEx is minus 360 million, showing a decrease of 8.8% over the past 5 years. And free cash flow is 6.9 billion, showing a oh sorry, I didn't put the right numbers here, but showing a 50% growth since 2019. I'm so sorry for this error. Financial ratios. So first of all, the return on equity is 45%. The return on invested capital is 34.5%. The return on assets is approximately 17%, and the return on invested capital is 24.3%, which, in my opinion, is extremely good compared to most other businesses. The stock valuation. Now let's start with the DCF. The DCF, with a discount rate of 9%, a revenue growth rate of 8% for 10 years, and a growth in perpetuity of 2%, it gives us an estimated fair value of $372. Multiples valuation, we get 20 times earnings, $246, 20 times operating cash flow, $296, and 25 times free cash flow, $382. And if we combine them, we get $305. The average analyst target price is $610.33, and the intrinsic value is $429.23, which is calculated as the average of the three fair values from above. The margin of safety I've applied is 15%, and the acceptable buy price is $364.84. Now, I'm not sure if this is a sell. This company is very overvalued, but they do really have prospects for growth. Their business is a monopoly, and they are showing they basically have a low capex, very high operating cash flow margin business. They have a huge moat. They have a very good balance sheet. So all of these factors together show me that this company is not necessarily a sell, but they're definitely not a buy at the current prices. I think that they're a hold, but yeah, if I should give a rating, I think I should give a hold. Now, as for the conclusion, a short commentary on Adobe. I personally use it It's very great. Adobe Premiere and Adobe Photoshop are the ones I use. They're pretty good, and I've never really used their competition. Seen some things like called Filmora or yeah other apps, but I don't like them. At least what they look like. I'm used to Adobe apps, and yeah, I think they're great. I think their mode is really good. Um, I think where they are lacking, though, in my personal opinion, is low priced options. I mean, if they could somehow release a very low feature Adobe Premiere Pro or a sort of toned down version for people with no money and I don't know, give it at like $5 a month. I think that would be great because then they could also address the segment that pirates their apps because they have a problem with people pirating their apps. But as we've seen, they've increased their prices. People have still stuck to their brand, so their moat is insane. They are a monopoly, but no one is really attacking it. Yeah, this is a great company all in all. Um, it's just the price that's the problem. As a value investor, you have to actually take a real look at the price and say, I am I going to buy it? And yeah, this is not really a bargain. A great buying price, I don't think it will ever reach it again, but I think a great buying price would be somewhere in the 350 to 380 dollar range, somewhere like that. Now, I think that's all for today. There's really not much to add to Adobe. And yeah, thank you for watching. I hope you find this video interesting. And also check out my new investing blog featuring in-depth analysis. You can check it in the description. I've already done two analysis, one on Crocs and one on British American tobacco. Thank you for watching and see you in the next video. Bye.